Hey everybody, this is Nina Gervasi with Cary Area Real Estate, brokered by eXp. And as you know, I answer the most frequently asked questions that I get about real estate here on YouTube. And today I have a special guest with me. Gamal is with a phenomenal lender he's actually in Michigan. And so he is going to tell us all about himself. And we're going to do a little Q&A with him because so many questions about first-time home buyers, what will happen to my credit score during the approval process. So I'm going to let Gamal introduce himself and then we'll jump into it. So Gamal, welcome.
Thank you, Nina. Hello, everyone. Like Nina said, my name is Gamal Shohatee. I'm with National Mortgage Home Loans out here in Michigan, but we do loans throughout America and with Nina's clients as well. Excited to be here. Been doing this for a while, and I look forward to answering all of your questions.
Fantastic. So everybody has to please excuse me. I am going to look down at my sheet because I did write down my questions for him and I gave them to him ahead of time so that we could cheat a
She
little
did.
and have the
Yeah, she
answers
did.
ready for you.
I love the honesty.
All right. So Gamal, one of the biggest questions that we get is what is the difference between a pre-qualification and a pre-approval?
Yeah, that's a great question. So pre-qualification, uh, essentially it's more just verbal, right? Pre-approval, it's a little more in depth. Typically, listing agents, right? The agents representing the sellers, they want to see pre-approvals, right? They don't put too much weight on pre-qualification. The reason being is literally anybody can say anything on the phone and get a piece of paper that says you're pre-qualified. It means absolutely nothing. However, a pre-approval, it takes a little more effort, right? We have to kind of verify everything, take our time, collect some documents up front, make
Okay.
sure everything is what we expect it to be. And that way, there aren't any surprises while underwriting after you get an agreement. That's why listing agents love pre-approvals over pre-qualifications.
So basically, it sounds like when you do a pre-qualification, it's
Mhm.
more like just a phone conversation, asking some questions and saying, sure, you could potentially purchase for this amount, but it sounds like it's not until you actually get the documents in hand that you can verify what they really could potentially be approved for.
That's exactly it. I look at pre-qualification like a hypothetical pre-approval, right? Well,
Nobody likes
hypothetically,
that.
right, yeah. Hypothetically, yeah, assuming that it's this and that, then yeah, you should be able to get the financing. When we're talking about purchasing a home and finances, nobody wants to talk about hypotheticals, right?
Listen, that
Pre-approvals
is
is where
so
you want to be.
scary. It's
Yeah,
it's
yeah.
scary to think okay, so for those who watch my other YouTubes, understand that in North Carolina, we have something called the due diligence fee. It is a
Hmm.
non-refundable form of deposit. You make it to closing, that comes back to you, and it's part of your mortgage down payment,
Yeah.
closing, whatever you want to use it for. But if you walk away because your loan isn't approved down the
Hmm.
road, you lose that money. Now, granted, you don't give that money if you're just submitting your offer. You only have to give that money if your offer is actually accepted and they sign, and then you have to give it. But listen, at that point, it's too late to go off of a
Yeah.
pre-qualification letter, submit your docs, and then find out you're not actually approved as you are absolutely right, especially in North Carolina, where that due diligence is so scary for people, could be a lot of money. Giving up a lot of money without knowing that you're truly approved, bad decision.
I agree. That's a great point, right? In addition to the fact that hey, pre-approval is viewed stronger to a listing agent, like you said, I mean, it benefits yourself. Why
I
risk it, right? Why risk it? Go ahead and get it verified. So I spent a few years underwriting as well on the underwriting side, and what I can tell you is what you say on the phone or what you think you qualify for is completely different, right? What we look for on the documents are not what you typically think, right? So we look for specific things and you owe it to yourself to make sure you actually do qualify before
yeah.
investing all that time into finding a home, before investing that money into a due diligence deposit. Just take a few minutes, get some documents. It's nothing crazy,
Absolutely.
it's some very basic documents, verify everything, go to sleep easy.
All right, so that's perfect. So what are some of the things that you require during
Yeah.
the pre-approval?
So it varies from borrower to borrower, right?
Okay.
Depending on their situation, the scenario. I can tell you that what we like to verify three things, right? Income, assets, credit. I know we'll touch on credit a little later. So income, that kind of depends on their source of income, right? What type of income they have. Typically, if you're a typical W-2 earner, we're gonna need your most recent 30 days worth of pay stubs, a lot of times your most two recent years W-2s.
Okay.
If you're self-employed, we'll take a look at your tax returns. And then assets, where's the money coming from, right? Let me get 2 months bank statements, verifying the money. Make sure there aren't any what we call large deposits. We have to verify every single dollar that's in the bank account, right? That's because of mortgage laws. That's something we have to do. Last thing you want to know is, find out that, hey, I can't use my own money. So let us take a quick peep, make sure everything is on the up and up, and that we can use everything and there aren't any surprises down the road.
Okay, so I'm going to throw a curveball at you that wasn't
Okay,
on here, but it'll be
that's
easy
okay.
for you to answer since you already brought this up. You talked about large deposits, and one
Hmm.
thing people ask is, can I take money from my 401k, borrow from there, and make a large deposit? So that's one thing that they ask. They'll ask, can I get a loan from my parents? And they do
Okay,
ask loan versus gift money. So
okay.
talk to us about those really quick when discussing large deposits into their account.
Yeah, so in a nutshell, what we can't use is what's called an unsecured loan, right? So that's like a personal loan from a friend or family member, right? Or just, hey, going to a bank, let me just get a personal loan. Stuff like that, we can't use. Now, when you're talking about accessing money in your 401k, we could definitely use that, right? Even if you're not withdrawing it, but you're taking a loan on your 401k. A lot of times we can even use loans on other things as well, right? If there's collateral, now we'll have to take a look at that statement, see what the payment looks like, make sure we're taking that into account. But as long as there's collateral, as long as it's what we call a secured loan, we'll be able to use those funds.
Right?
In addition, if you have parents who are kind enough to help you out, if you have friends, family, we can use a gift. You kind of touched on that. And the difference between that is a gift is not expected to be repaid, right? So we're going to ask for a gift letter where the donor, the person giving you the cash, is stating, hey, Nina does not have to give me the money back. She's a wonderful person. I just want to help her buy this home. And we can use that as well.
One thing I want everybody to hear that he said is that the lenders will require a gift letter. So they are going to require something in writing stating you don't have to pay it back. So if you're going to parents for this type of thing, you're going to have to be sure that you have that. So that's going to be really important. And I'm sure that you're also looking at like debt to income ratio and, some people, their credit scores and where they fall on everything. So that pre-approval is going to be looking at a lot more than just a conversation on the phone. You're actually going to get documents looking at all of this.
Absolutely. Absolutely. Yeah. And just kind of speaking on that with the credit score and whatnot, a lot of people rely on websites like, Credit Karma, right? Or sometimes your bank might have like an app where you can access and look at your credit score. That's not very accurate, right? And that's not really what we use, what the lender
Okay.
use, right? We use a tri-merge credit report. We take a deeper look, which means we look at all three credit bureaus. And yeah, yes, yep, all three. And we take a deep look and make sure, that everything is reviewed.
Okay, so that's important because a lot of people will come to me and say, I just checked on Credit Karma and my score
Hmm.
is, and I like to stay in my lane. Everybody here on YouTube knows I'll say, I'm going to speak a little bit on this. I'm going to let the experts speak on all of it. And when they come to me and they tell me I pulled my credit, my words are congratulations. I'm really excited. But to me, you need to get with the lender to really understand the full picture. So this is why
Absolutely.
it's so important to start at the very beginning of the buying process, getting pre-approved. But a lot of people are so afraid to do that because they don't want their credit pulled and their credit score being affected. So can
Yeah.
you tell us a little bit about that?
And that's definitely understandable, right? Obviously, we work hard to keep our credit score as high as we can, right? And we want to protect it, right? And so I definitely understand where borrowers are coming from. So with that, there's twofold, right? One, we can take a soft look at the credit, which wouldn't impact their score. Also, in addition to that, if a lot of times they have it checked, and I think we're going to talk about this a little deeper later, but they might have it checked by another lender. Well, there's like a shopping clause where you can get it checked again and it won't impact it again, right? And I tell people all the time, be that as it may, in the end of the day, let's say it does impact your credit by a couple of points, right? Because we're not talking about anything significant, right?
Okay,
We're
good.
talking
I
about a
need to
couple
hear
of
this.
points. Yeah, I want to make sure that we all understand. It's not like you're going to go from an 850 to a 650. That's not the impact that this has, right? It's a little signal there that, hey, this borrower is looking to borrow some money, right? That's the only reason that inquiries are even taken into consideration, right, when it comes to credit scores.
Okay.
However, if you're not going to use it when it comes to buying a house, when are you going to use your credit, right? I mean, this is the time to do it, right? If you have a great credit score, like I want to make sure I can utilize and take advantage of my credit when it comes to buying a home versus anything else, right? It's way more important than the credit card that you'll get, right? It's way more important than any other. This is the biggest uh, asset, right? Biggest investment the average
Yes.
American will make. So this is the time to take advantage of your credit and actually use it.
All right. So if you and you said it now, like how many lenders can pull credit and within what time frame and how would that affect the credit score then?
Yeah, great question. So and this is strictly for mortgage purposes. So if a lender takes a look at your credit for mortgage, if you have a mortgage inquiry, you have a 45-day window. That's
Okay.
like kind of considered a shopping period, right? Where you can get it checked by, as many lenders as you like,
Okay.
without it being impacted again, because it was already impacted that initial time, right? So, and the government placed that regulation there to make sure that homeowners and potential homeowners are not being taken advantage of, right?
Fair.
They want to make sure that they're not putting all their eggs in one basket, so to speak, and they're actually speaking to multiple lenders.
Okay. So the protection is within 45 days, there's something on your credit that says like a mortgage inquiry, and multiple lenders can pull it and it's not going to affect their score any more than the initial one did, which we already said is only a couple points. It's nothing drastic.
Correct.
All right. So then how long is that pre-approval good for? And then when it expires, right? When it's done, do you have to pull credit again and what happens?
Yeah, so essentially the pre-approval letter is as valid as long as the credit report is valid, right? And the
Oh,
credit
okay.
report is valid for 90 days.
There.
So after those 90 days, the credit report expires and thus, the approval letter expires as well. And at that point, you would need to repull credit and get reapproved.
Okay, so within 45 days, everybody has to hear this and remember these numbers. You can get it pulled by other mortgage brokers as many times as you need. Okay. But within 90 days is what it's good for. And then this process starts over again.
Correct.
Okay. So that's actually really important because I know that they're thinking, oh, I want to start shopping, but I don't want to pull it because I might not buy for 2 months. You're good.
Yeah,
Like during this time, you might find something. And especially in our area, Jamal, it is super competitive.
it is.
The house could go on the market Thursday, Friday, and be off the market by Saturday, Sunday, or even the same day in some cases.
Yeah.
And those that have to wait for a pre-approval are just going to be, okay, so it's not taking that long, right? Like how long did you say it takes again for the pre-approval process?
Yeah, honestly, it can be done right there and then, right? If I have the
Okay.
documents, I can get it done within,
Yeah.
30 minutes. If I have all the documentation, the conversation itself, just a bunch of basic questions, simple questions about, like we said, income, assets, take a look at the credit, and that's it. And to kind of touch on your point, if let's say you're purchasing in 2 months, right? For example,
Mhm.
why wait? Because you never know. There might be there might be something
Exactly.
blocking your ability to get it, right? I might bring something up like, hey, I know you thought, everything is clear. However, there's this one thing that we have to work on that's kind of limiting your approval. So if that's the case, you'd rather do it sooner rather than later. And then that way you can optimize your approval if need be.
Well, I mean, one of the things that you're mentioning, and I kind of also stress to my buyers, something that you could bring up to them could put a little bit of a roadblock. But here's the other thing. You and I work really well together, and I believe in all of this being a partnership, right? Like the
I agree. Yeah,
buyer, you and me, this has to work in great communication. And I know that
absolutely.
you do the same thing as me. These buyers sometimes get this, oh my gosh, I'm pre-approved for 300,000, right?
Hmm.
And then they start to get really excited and looking online and all the pretty flashy, countertops and backsplashes,
Yeah.
and all, the renovations that look great. And then they come to find out what that mortgage payment will be in total. So everybody, please listen. Your mortgage payment isn't just your mortgage payment. Your
Hmm.
total monthly payment is going to be your mortgage. If you didn't put down 20%, you didn't qualify for a certain program, it's going to include your PMI, your private mortgage insurance, your homeowner's insurance, your property taxes, and your HOA. At minimum, you have 5 things that your total monthly payment equals, right? So you might get approved for 300, and then and my biggest recommendation to all my buyers is to bring you every listing and say, what potentially could my monthly payments be with this house at the given rates? And when they hear that, some of them get sticker shock and they're like,
Hmm.
I don't want to pay 2,200 per month. I want it to be
Absolutely.
at 1,500 per month. Well, honey,
Yeah.
that takes you from a $300,000 purchase way down because of where the rates are and everything else. Like there are so many things that come in, and that's a roadblock.
Yeah.
Understanding their monthly payments
Yeah.
could stop them from moving forward or have to change where they're looking. If the price point where they were in this bubble means, hey, I can't buy here because I want to now be at 1,500, 1,700 per month, you might have to travel. You might have to look elsewhere to get what
Absolutely.
you want at that price point. And that's why this communication early on is so important. So
Yeah.
when buyers bring you houses, what is it that you're kind of educating them through, including discussing closing costs if you can?
Yeah. Yeah. So and I'm glad you mentioned that. So before I answer that question, I just want to echo, and this will kind of answer your question as well. Echo exactly what you just said. So communication is huge because when we approve borrower for a loan amount, it's not necessarily that loan amount. We're kind of approving you for a payment,
Yes.
right? Which is a combination of the size of the loan, right? The principal interest payment for that. And then in addition to that, the taxes and insurances for that specific property, which again, vary property to property. So that's one of the main things I look at, right? And that's why that communication is huge because if we know, hey, client X can't afford a $300,000 in their example, that $300,000 approval if the taxes are past this amount. Well, we know these certain areas have those high taxes, so we need to avoid those areas, right? So that's something I look at whenever a client brings an address to me, a property to me before they even check it out. I always like you said, we recommend let's look at the numbers before you even invest time falling in love with the property, placing an offer. Let's make sure the numbers are where they would need to be. So we will look at, are there any HOAs with this property,
Mhm.
right? Is the property in a flood zone? This might not be,
Yeah.
yeah, that's a
That's a
big
whole
deal.
other thing.
Yeah, that's a whole nother, flood insurance is not cheap. I'll tell you that right now,
Listen,
right?
that's on us. I have to tell you, buyer agents, before they even go out and show the properties, should really be educating their buyers as to whether something falls in a flood zone or not. So
I
it
agree.
should be on us to really get that done for them as part of the due diligence process that we have to protect them.
Yeah, yeah, I agree, right? I agree, and I think really honestly, I believe it's on both of us, right? It's on the realtor and the lender as well, because you're obviously the realtor showing them the property, right? You're kind of picking the properties for them. Same time, I'm breaking down the numbers, so I think it's really on both of us, and it goes back to just being a team effort, like you said. Yeah, and then in addition to that, right? Insurance, taxes of the property, like I said, HOA, where's the market at for that day, what interest rate are we looking at? How does that impact your payment? Are we still qualified for that amount? And if so, what payment are we looking at with the
Yeah.
tax, insurance, all that being considered?
Listen, the one thing I want the buyers right now to hear, and you and I are going to do a few more episodes together on different topics.
Absolutely.
There are so many different things that we get questions on, and the mortgage process is obviously a key component to getting a house. We can go look at everything we want all day, every day, but this is how you're getting your house. So this has to work out. I want everybody to hear, I'm not going to sell you a house, buyers. Listen, I can open a million doors for you. If I'm not educating you, I'm not protecting you. And my biggest goal is to protect you and make sure you are fully informed. I don't care about the commission. I don't care about any of that. I care that you are protected. And that's why I took this. When I bought my house, I didn't have a great situation with a realtor. I didn't have full education. And that was one of the reasons that I vowed to be the type of realtor that I am, which is leading with integrity and honesty. And I know that Gamal is the same way, which is why we're partnering with
Absolutely.
him so that we can all come together. He wants you approved for a home so that you have home ownership and you're going to build equity, but only if it means you can do it and you can afford it. And like I said, we'll do other episodes on different topics, credit repair and other things like that. But this is going to be, again, a relationship, something you must start from the beginning, start early, get connected, and just make sure that everybody understands what your buying process is, what you're approved for, what you can afford each month, so that you're not in trouble down the road. Wouldn't you agree?
Absolutely. Most definitely. Like I said, why not? I still can't think of a reason of not to look into it, right? If
Yeah.
you know you're going to need financing, just take care of this first. It just makes sense. I feel like you're kind of putting the cart before the horse if you look for a house first. It just doesn't make sense. Figure out the financing. All it's going to do is make sure you're more informed, make sure you're well equipped, give you more buying power, and really that's it. I mean, I don't see any downfall of figuring out what your options are. And if I'm being honest, I feel like sometimes, buyers are just kind of scared of rejection, right?
Mhm.
And you have to understand, and that's understandable. At the same time, I'd rather know if I'm having issues getting financed, I feel like I'd rather know ahead of time rather than later down the road after I invested all this time. And again, that just gives us more time. If there are any issues, gives us more time to address them. How can we correct that? What do we have to work on? How can we get you approved if we can't get you approved today?
I'm going to ask you just two more quick questions
Yeah, go ahead.
because I know that they'll come up. The one thing is about how much in terms of closing costs on average, and if you want, you can use, since I used 300,000 before, a $300,000 home scenario. Should somebody expect potentially in closing costs?
Yeah, in that scenario, so when it comes to cash to close, you mainly have three things, right? So you have your down payment. That will
Okay.
vary from program to program, right? There are benefits of putting more down, there are benefits to putting less down, right? And that's a conversation to have. The second thing is escrow, right? Are we escrowing your taxes and insurance? So what that means essentially is, do you want your monthly payment to also cover your tax payment and your insurance payment? If so, we have to establish an escrow account up front. And that really just varies from, county to county. And obviously you shop for your own insurance as well. So we have to kind of take some money up front. And the cool thing about this, it's not technically closing costs. It's more a separate escrow account, which belongs to you. It's your funds, but it's kind of put to the side as a cushion to ensure that taxes and insurance are paid on time. And then lastly, you have your closing costs, right? These are the third party fees, like your title work,
Yeah.
appraisal, all that good stuff. I would say you can expect about 2 to 3% of the purchase price when it comes to closing costs.
Okay.
So if you're talking about, a $300,000 purchase, you can expect anywhere right around 7,500. I would say 7,000, 7,500 is what you're looking at.
Good. I mean, and people need to be, and that's With their mortgage down payment, you're saying, or outside of their mortgage down
So
payment?
that's outside of the mortgage down
Yeah.
payment. Now, the cool thing about that is there's a lot of things, and this is a deeper conversation maybe for another episode, but there's a lot of things that we can do with the interest rate and program to actually kind
Okay.
of take care of some of those closing costs, right? So that's just kind of the surface level. Expect
Good.
about 2 or 3%.
And now we left them with a little nugget for them to come back for the next
I
episode.
did. I did. You caught on. That's what I
That
did.
was
Now we
perfect,
know what we're
Jamal.
talking about next time. Yep, yep.
Yep.
It's
Thanks.
working. It's working. There's magic. I
Perfect.
feel it.
All right. Well, everybody, all my buyers out there, I hope that you have appreciated this. I'm so grateful to Jamal for coming on and
My
being a
pleasure.
part of this with us and explain to us. Remember, it's only going to hit your credit a couple of points. We're not talking hundreds of points here. You have 45 days for all those lenders to be doing the mortgage credit inquiry on your credit score, and it lasts for 90 days. And we're doing this up front. We're not doing a pre-qual. We are
Mhm.
doing a pre-approval. We are going to get you ready for this. And this is a relationship. This is a partnership, all of us together, because we're here to protect you. That's our goal.
Absolutely.
All right,
Absolutely.
Jamal, thank you so much for
Thank
being
you for having me.
here.
It was a blast. I had
Yeah.
fun. This is
And
awesome.
then everybody stay tuned for the next episode. We answer all of your most frequently asked questions here on YouTube. So we'll see you on the next one.
Take care.
Thanks.